I think what we are seeing, and I think my reading of the Chinese approach to this confirms it, and that is the whole of the G7 credit system is becoming very unstable. And the only safety for anyone trying to preserve their capital, preserve their wealth, is to have it in real money, which is still, despite all the propaganda coming out of America since 1971, it is still physical gold. Gold coin, gold bullion. That is real money. The rest is credit, and it is credit that is being destabilized. Anything that is priced in credit is destabilized. So these are very, very scary times.
Alasdair Macleod, representing goldmoney.com, highlights a critical concern regarding the potential consequences of soaring interest rates. He suggests that an abrupt increase in interest rates could trigger a failure in the credit system, leading to broader instability in the G7 credit framework. As he points out, this instability has far-reaching implications, affecting anything priced in credit. Central banks worldwide have aggressively campaigned to combat inflation by raising interest rates. Over the past 2 years, these rate hikes have been the steepest in decades, averaging around 400 basis points in advanced economies since late 2021, and approximately 650 basis points in emerging market economies. Macleod further emphasizes that spiking interest rates can erode the currency's value for measuring assets like gold. He notes the trend of investors seeking refuge in gold due to geopolitical risks. Central banks have significantly increased their gold reserves, acquiring 1,097 tons between 2020 and 2022. The trend is expected to continue, with more than 100 tons added to their vaults each quarter. Notably, the desire to diversify away from reliance on the U.S. has gained traction, particularly in the Middle East. China, in particular, has made substantial efforts to encourage its citizens to invest in gold and silver bullion. The People's Bank of China has introduced mechanisms for citizens to easily convert their renminbi cash savings into physical gold, indicating a serious commitment to gold ownership. Macleod suggests that China may already possess a significant hidden cache of gold, underlining the nation's strong focus on gold as an important part of its economic strategy. Before diving into Alasdair Macleod's interview, subscribe to our channel and give this video a big thumbs up.
You know, it's war risk, it's all those things. But I think there are other things going on in the background. I mean, we see that central banks are still trying to mop up the markets, trying to take any physical gold they can get hold of. Last month, according to World Gold Council figures, central banks bought another 77 tons. Now, that might not seem a lot in the overall scheme of things, but central banks are just one of the buyers in this situation. There is very big money, in my opinion, in places like the Middle East, which is moving into gold because I hate to say this, but many, many years of bossing the Arabs around, we are not popular in the Middle East. I mean, Americans are very unpopular. We are probably tolerated, if I can put it that way. The Europeans, they've never really been into it. It's really been America and us. So I just think that I just think that the demand side is really ramping up. Now, there is another aspect to this, and that is back in, I think it was in June, the Chinese government instructed the state-owned or state-controlled banks to offer facilities to account holders to swap deposits into gold. And the thing that's interesting is that this is angled at even the poorest in society, the poorest who have bank accounts, obviously. So why is China doing this? I mean, it's not as if China is she's got no interest in ramping up the price of gold, as it were. I mean, okay, in my opinion, she's probably got about 30,000 tons, could be more, hidden in various accounts like, the People's Liberation Army, the Communist Party, the youth wing of the Communist Party, and so on. Hidden, if you like, from the reserves which are declared on the balance sheet of the People's Bank of China. A rising gold price isn't actually a rising gold price, it's a falling value for the currencies that you're measuring it in. And that, I think, one has to remember. And I think that it is interesting that we have returned to the situation where we had in the 1970s, where the relationship between bond yields and gold was higher bond yields, higher gold. I mean, we went into the 1970s with a Fed funds rate around about 6%. It subsequently dipped to about 3.25%, I think. 1971, 72, maybe. And gold was $35. We came out of that decade with gold looking $850 on one fix. And the Fed funds rate was like 19. So the idea that, bond yields and gold are inversely related is completely wrong. I mean, and there are very, very good reasons why that is the case. If you worry about stability of credit, then you go for gold. If you're not worried about the stability of credit, then you go for bonds. I mean, it's actually as simple as that. So that, I think, is the answer to your question. Most people, they're all Keynesian in the markets. There are a few monetarists knocking around. But basically, they actually think that from their portfolio point of view, holding gold means that you are sacrificing income compared with holding US Treasuries.
As of the end of September, China's gold reserves have climbed to an impressive 2,191 tons, maintaining gold's share at 4% of China's total foreign reserves. This substantial gold accumulation has not gone unnoticed, leading many analysts to speculate that China may be the enigmatic buyer quietly amassing gold reserves, potentially as a strategic move to reduce its dependency on the US dollar. Macleod underscores that China is taking a deliberate and cautious long-term approach to its gold holdings. Conversely, Russia has emerged as a prominent player on the global stage, now ranking among the top 4 countries in terms of gold and foreign exchange reserves. Russia has taken a bolder step by linking the ruble to gold, a move aimed at bolstering its currency's independence from US dollar comparisons. This proactive approach taken by Russia aligns with Macleod's belief that the nation is taking a more assertive stance in driving changes in the global monetary system. Let's get back to the interview as Macleod highlighting how China and Russia have different attitudes toward gold and its role in the global financial system.
People must have noticed, but they perhaps haven't thought it through, that central banks are very keen to acquire gold, which they see as having no counterparty risk. And they've been accelerating their gold ownership. I mean, outside the G7, this is, the G7 nations basically have just sat pat on what they've got or what they say they've got. But all the others have been, obviously running scared and adding to their gold reserves. The fact that they do this tells us that central bankers, whatever they say in public, actually do realize that gold is money and the rest is credit. So that's why they're doing it. When it comes to China's policy on gold, I think they differ very much from the Russians, who I'll come to in a moment. China takes a very long view. It doesn't want to be blamed for destabilizing other places and so on and so forth. And it's a Chinese approach. They've been around, 3,000 years. They have a very long view. And this is just one episode in their long history. So they're not going to go out and upset everything. And I think this is why the new BRICS gold-backed currency, which was really devised by Russian interests, wasn't on the BRICS agenda in Johannesburg back in August. China effectively vetoed it. Now, I also know that the Indians were not at all keen, partly because they haven't really got any significant amount of gold. And also the Keynesian government are very Keynesian in their the Indian government are very Keynesian in their economic approach. So the Indians have got a bit of a problem because, they're in the Shanghai Cooperation Organization. They see everybody around them as accumulating gold. They don't believe in it. But they can't afford to ignore it. So, they would on margin like to acquire a bit more gold. They think it's absolutely ridiculous that their population runs out and buys gold rather than having rupees. But if you look at what happens to the value of rupees measured in gold, I mean, you get a pretty good idea who's sensible in this, and it's not the government, that's for sure. Um, but when it comes to the more aggressive party on this, I think we're looking at Russia. It was Russia that pushed this idea, supported by various other countries, incidentally, but it didn't, sort of, if you like, cut the final draft. And I think that Russia is being put into a position with her own currency being undermined, her own bond yields looking like 13.5%, which is ruinous, really. I mean, how can you run a developing economy on that sort of interest rate? An interest rate really that fails to protect the currency, because the currency has declined from, I think it got down to up, as it were, to about 60 to the dollar, and it's now down to close to 100 to the dollar, 1 cent, 1 ruble. I mean, has been a very weak currency over the last 18 months. And that's a situation which is not going to be reversed with higher oil prices. So I think that the Russians understand this. I know that they have other gold other than has been declared as the central bank's gold reserves, which are somewhere over 2,000 tons now. They've got a further 10,000, maybe 12,000 tons in 2 other accounts, which can be mobilized as reserves should they wish to put the ruble back onto a gold standard. Remember, the ruble was on its own gold standard until Khrushchev took it off. I think that was back in the late 50s. So this is something which the Russians actually do understand.
All fiat currencies eventually collapse, mainly for the same reason. The issuing government becomes over-indebted and abuses its privilege by debasing its species or overprinting its money. In contrast, physical gold stands out as a unique form of currency, for it carries no associated counterparty risk, rendering it an invaluable store of value. What does the enduring allure of gold as a store of value mean for individuals and governments seeking to safeguard their wealth and financial stability? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.